Trump said he's going to encourage, I guess, $200 billion of. Hey, Brian Thompson here with eXp Realty. I am with, of course, Matt Primrose, New American Funding Loan Officer. So we had some big news last week. Trump said he's going to encourage, I guess, $200 billion of mortgage-backed securities to be purchased. So tell us what that means.
So let's talk about, what it is and what it isn't. As far as, the Trump administration just talking about purchasing $200 billion in mortgage-backed securities, that's great. That's stability for the Treasury market. Obviously, mortgage rates follow the 10-year Treasury bill. So obviously, just like if you guys remember the old term quantitative easing when the Fed was doing that, what that provides is basically stability for Treasury. So, obviously it's basic supply and demand. If you've got, the administration coming in and purchasing that dollar amount as far as treasuries, that's going to help keep rates low. It's going to help keep the 10-year Treasury bill low, which obviously in turn helps the, mortgage rates. So that's a fantastic, thing that they're doing, and it's going to provide a lot of stability.
Yeah. So he specifically mentioned Fannie and Freddie. So tell us a little bit about why there haven't been that many purchases as of right now, and this is going to be such a big deal.
Well, as far as they're just not, the Fed's actually been, as of the last couple of years, is actually selling off their Treasury because they're trying to unload their balance sheet. So with them coming back in the market, and why it's a big deal is because, obviously people that buy Treasuries are, people in the U.S., China, obviously, the U.S. is seen as the reserve currency. So with that coming back in, I mean, that's a huge deal for obviously a lot more stability as far as what, we're looking at as far as the rest of the market and the U.S. as a whole.
And we just had a recent rate drop, went below 6% for the first time since 2022. So was that based, do you think, just on the news of this happening, or?
That was because that happened, Brian, last week. So we briefly saw on Friday rates dip to the lowest it's been in a while at about 5.99%. So that was part of it. We're a hair back above it now, but obviously we're moving in the right direction.
Yeah, and I mean, I don't know about you. I mean, you're in the rate business way more than I am, but I was shocked to know that it had been since 2022 since we're below 6%. So
yeah,
and
it's a big deal.
Yeah, it is. And I know nationally we saw about a 30% increase in applications. Did you see anything here locally in Phoenix?
We did. As far as the Phoenix market, and buyers aren't driven by, just rates. I mean, they're driven by their payments. And when they see those payments, somebody can save $150. I mean, they're going to pull the trigger. So, when that happened last week, nationally, yes, mortgage rate applications for refinances were up 30%. But yeah, even here in the local market, we saw a significant increase.
Yeah, and we can't stress enough, and especially you can't stress enough, I'm sure, that you can't wait for the perfect rate, because even if, let's say, it sits at 5.99% for 2 weeks, then your new next perfect rate at 5.99 is going to be 5.75. So you could probably continue to wait, right? So it's best just to go ahead and move forward as long as you can afford it, right? I mean, and it's a lot more rigorous of a qualification now, as long as you can afford it then. And then again, I mean, we've been beating this up for a while. You date the rate and you marry the home. So if it's a home you fall in love with and you get a chance to refinance, do it, right?
That's it, Brian. Yeah, you gotta be ready to pull the trigger.
Yep. So, okay, that's it. We're gonna come to you with some more videos coming soon. So, thanks, buddy.
Yep.
All right. See ya.